Welcome to another video. If you are new on BestTrading channel, please consider subscribing to the channel, hit the like button and also feel free to leave a comment down below. In today's video we will take a look at the Donchian channel. The Donchian channel is a simple yet very versatile technical indicator. The creator of the Donchian channel was a renowned trader named Donchian. The Donchian indicator plots two primary lines which are based on the high and low price over a specified period of time. You can also add a middle line which is the average of the upper resistance line and the lower support line of the Donchian channel. Donchian indicator structure and calculation. Upper line of Donchian represents the highest price for the last certain numbers of bars. Lower line of Donchian represents the lowest price for the last certain numbers of bars. Centerline represents a certain numbers of period high and certain numbers of period low divided by 2. Donchian channel can help traders identify whether a price movement is likely to continue or reverse direction. The Donchian channel is also known as the price channel, and they can help you identify the following. Gauge the trend. Market swing highs and lows. Support and resistance levels. Market volatility. Spotting breakouts. The Donchian channel indicator can be used to identify price breakouts above resistance levels and breakouts below support levels. You will have a better understanding of how to identify breakouts using the Donchian indicator. However, the Donchian trading strategy performs best, especially in trading markets. The Donchian channel accomplishes all the mentioned features by blotting three moving averages or bands that form a price channel. The channel periods are determined by a user-defined period, and our preferred settings for the Donchian indicator is 20 periods. This means that the Donchian channel will look back for the highest high and the lowest low price over the last 20 candlesticks on your chart and then plot that value. On top of that, we also have the median line drawn in the center. The median line is simply the average of the other two Donchian lines plotted on the chart. Feel free also to backtest different period values to find the best settings for the Donchian channel. The Donchian indicator is a free pre-built technical indicator that comes free with most trading platforms. The Donchian channel will eliminate a lot of the guesswork out of the equation when trading the markets. Donchian trading strategy. The Donchian trading strategy is an intraday trend following strategy that allows you to profit from the intraday trends. I will share some ideas and trading tricks that day traders and intraday traders can use to catch runaway markets. The main advantage is its ability to spot day trends that have the potential to continue after the first pullback. Although the Donchian channel might look similar to the Bollinger Bands, they are different. Unlike the Bollinger Bands, Donchian bands are calculated using a simple math formula that only uses the recent high and low prices. We're going to break down one trading secret that has never been exposed before. It's easy to understand because it has clear trading rules that everyone can follow and ultimately benefit from it. When we have a trading market that can be encapsulated inside a channel, the market will start to crawl along the upper end of the channel. This can lead to a potential breakout of that channel. Now let's dive into Donchian trading strategy. In this video, we're going to look only at the buy side. You can use the same rules for a sell trade, but in reverse. Step number 1 is of course to attach the Donchian channel indicator to your chart. Preferred setting 20 periods. For the purpose of this example, we're going to plot the Donchian channel on the 15-minute time frame. The preferred Donchian channel settings are 20 periods, which means that the channel lines will be calculated based on the price action from the last 5-hour candles. Step number 2, wait until the price crawls along the upper Donchian channel. The price should not go below the middle band during this stage. It's quite easy to visualize the crawling along pattern. When the price action touches the upper Donchian channel, and it stays glued to the upper line, we create the price effect where the price looks like it's crawling along the top Donchian line. If you think in terms of supply and demand, when the price is crawling along the upper Donchian channel without departing too far away, it means there are lots of buyers trying to push the price higher. This eventually leads to the seller capitulating once the breakout happens. Another characteristic of the crawling pattern is that during this stage, the price shouldn't go below the middle Donchian band. Note that the closer the price action moves along the upper band, the stronger the trend is. If you spot this type of price action, then you know this day trend has a big potential for following through. Now, all we got to do is to outline the rules of our entry strategy. Step number 3, buy. There are 2 buy entries. Buy 1, when the price pulls back to the middle Donchian band. Buy 2, when the price pulls back to the lower Donchian band. The channel width gives us a measurement of market volatility. When we have high volatility in the market, this will be shown on the chart by wide channel bands, whereas low volatility will be displayed on the chart by a narrow channel. Like with all technical indicators, the Donchian channel can be subject to false signals from whipsaws and sizable market swings. Breakouts are very hard to trade, and that is the reason why we prefer to enter on pullbacks. We recommend splitting your trade into 2 parts, as this will give you a better average entry price. The first buy order is deployed when the price pulls back to the middle Donchian band, while the second buy order is deployed when the price retraces all the way to the lower Donchian band. Our entry strategy will give us the opportunity to implement proper risk management. This entry strategy is a good way of framing a trade. So, you have a very specific entry point. By sticking to these entry rules, you will realize this is not a bad trade to take because you trade in the direction of the prevailing trend. Step number 4, hide your protective stop loss below the lower Donchian band. Your stop loss can be placed below the lower Donchian band. The catch is that you need to move to the left side of the chart and find the first part of the lower Donchian band where it is flat. You'll find that oftentimes the Donchian channel will plot perfectly flat lines. This can provide us with excellent spots to hide our stop loss. Last but not least, we also need to define where we take profits. Step number 5, take profit at the end of the day or if you want to ride the trend. The beauty of the Donchian trading strategy is that you can apply multiple exit strategies so you can maximize your profits. Now that we know that the supply and demand balance is skewed to the upside, we can expect buyers to step in on retracements faster than they have before. This can indicate that we'll have a buy explosion to the upside. This proposed exit strategy is to liquidate your position at the end of the day. Since we're trying to take advantage only of the intraday trends, we don't want to have any overnight exposure. Note that in this video we saw an example of a buy trade using Donchian channel strategy. Use the same rules for a sell trade, but in reverse. Thanks for watching, hope you guys have enjoyed the video and please don't forget to like and subscribe to the channel. I'll see you in the next video.